You can see is the TCS management all set to address the press with their numbers. Can we cut across to that? Yes, we can.
Chandra to kick off proceedings and just give an intro and then we'll move to questions.
Good afternoon, everyone. It's a great pleasure to meet you to announce our fourth quarter results as well as the annual results for FY11. We have had an excellent quarter yet again, and in terms of performance, it has been an all-around excellent performance for the quarter as well as for the year. We have delivered a revenue growth of 5.1% in Q4. That means we have for the first time crossed 10,000 crores in a quarter, and annually it translates to $8.2 billion. In terms of growth rate, the annual growth rate is about 24.3% in rupee terms and 29.1% in dollar terms. And our operating margin has been maintained sequentially in Q4, and we have delivered over 10% increase sequentially in the net profit. What it means is we are exiting a financial year at the highest margin levels, whether it is operating profit or net profit for TCS. Our annual operating margin is at an all-time high, and our quarterly operating margin is near historic high. So the revenue growth has been good, margin has been excellent. In terms of where it has come from, it has been pretty well-rounded, and we have grown in all markets, and the major markets all through the year has done very well, especially the US, and we have done very well in the emerging markets. In terms of verticals, the financial services has always grown, has continued to grow, but we have also done exceedingly well in a number of verticals. Retail we have done well, life sciences we have done well, high tech we have done well, and energy and utilities we have done well. All these industry segments are doing very well. From a services perspective, in this quarter you see a significant uptick in the enterprise solutions, clearly marking the return of discretionary spend. And our assurance revenue has crossed $500 million annually, $555 million. So overall, I would say it has been an exceptional year for us, and we are firing on all cylinders. In terms of people, again we have added a significant number of people, close to 70,000 people has been the gross addition. That is almost 20,000 people more than the original estimate we gave in the beginning of the year. So looking forward, the deal pipeline looks healthy, and we have a very sound platform which is robust, and we are looking forward to an excellent year ahead. Thank you.
First question from Kritika, CNBC. Mike.
Hi sir, Kritika, CNBC. Congratulations once again. If you can just break up what has been the total number of client additions this quarter, and if you can just give us an idea about what range does that fall into, $50 million plus or $100 million plus, and across what verticals. What are the key client wins?
So our client addition for the quarter is 39, and all our client additions are only key clients. The clients with whom we can build long-term relationships and can grow them from a 1 million, 5 million, 10 million, 25 million, 50 million revenue bands. And so these are very significant additions, and they have come across industry segments.
Okay. Can you demarcate which has been the fastest growing verticals in terms of financial services, assurance, etc.?
Yeah, from the segment perspective, financial services has done very well all through the year, and retail has done very well. High tech is doing extremely well, and we have seen growth in energy and utilities as well. So it's been all around, we are really seeing the power of the nimble organization that we put in place a couple of years ago.
Okay. So also in the last couple of quarters, we've seen a significant jump as far as volumes are concerned. Volume growth is slightly tepid this quarter. What is the reason for that?
I think we have to look at it holistically. If you look at the annual growth, we have had a volume growth of over 29%, 29.5% volume growth. And Q4 traditionally is a quarter where the volumes will be lower compared to the earlier quarters, and so we have seen a 3% volume growth this quarter, and if you see annually it's a 29% volume growth. So I think there's no cause for concern.
Okay, so last question, has the wage hike quantum for the coming year been decided yet, and have you factored in, if yes, have you factored in the kind of impact that it would have on margins going forward once it does get absorbed?
The wage hike has been factored in. It's being announced to the employees. To share the details, I'll give it to Ajay, and after that Maha will talk to you about what is the impact of that in the margin. Come on.
Yeah, from wage hike point of view, I think we're doing pretty well. We are going to give about 12 to 14% is the increment that we have decided for offshore, that is in India.
Okay.
And as far as our locations overseas are concerned, in the major markets we are going to give 2 to 4% is what we are giving, and in the emerging markets, that is where we are doing between 2 to 10%, because the variation in countries, etc., is far too much. So that's why you see a broader range for emerging markets.
Obviously, Q1 is a time when the wage comes in, as we say, that 100 rupees of per fellow is earning. The next month he is going to be earning 112 thereabouts, and therefore, the revenues will have to catch up. But we should be in a position to handle all that, and I can't really give you anything more than that at this time. Yeah.
Maha, last 3 quarters or so, you've had several levers put into place to contain margins, to keep them at the current levels. Going forward, say in Q1, Q2, what are the levers that you're putting into place to control margins? Have you factored in currency movements, and are you also well hedged?
I don't know whether anyone has factored in currency change, because that's a very difficult one to handle. But leave that apart. As we have always said that there are traditional levers which we have exercised so far very well. One is really the on-site offshore movement and so on. But then there are also dynamic levers that you keep looking at on a periodical basis. One of the things that we have talked about is that can we keep this SG&E around a certain figure in terms of absolute amount, and therefore it delivers, it becomes a margin accelerator in some sense. So those are the kinds of things that we will deal with. So we'll move away from what I would call the traditional levers to the dynamic levers.